Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway. Today's date is Thursday, August 17th, 2017. Well, folks, the SPY just filled a major gap. In fact, if I zoom out, you can see it pretty darn clearly right here. This is the gap from last Friday. If you recall, last Thursday, so it's interesting because we're seeing a sell-off Thursdays emerge, meaning that it seems like almost every Thursday we're having some selling pressure in the markets. Last Thursday, we had a big drop here. Friday was a pause day. Friday closed right here. We then gapped up on Monday, rallied higher, and then we're now seeing another hard sell off on Thursday. Notice again, here's your gap fill. This is where we closed on Friday. That's exactly where we hit just literally minutes ago. On a technical basis, just so everyone's aware, that's a day trade right there. That's a major support. So again, as a day trader, I jumped in, jumped out, made a quick nice score right there. And again, that's just a quick trade. You get in, you get out for like $500. I'll take it any day of the week. All right, bottom line is though, nice sell off. I want to go into understanding what to look for in this market. So going into the weekend, how do we know if next week's going to be a sell-off or the usual buy the dip mentality? Like, look at Monday. Monday was a buy the dip. Everyone was happy by Monday. The world didn't end in nuclear war. Over the weekend with North Korea, markets gapped up, rallied up, and went away here, all the way beautifully up before this latest sell-off. So what do we look for going into Friday to see if anything could potentially change? Is it going to be a buy the dip, or could we see some further downside next week? Now, generally, just because it's been happening so often, buy the dip would be your default. That's what you would go to. You'd say, okay, well, every dip has been bought, so why not this one? I wouldn't fault you for that, but I do want to show you the technicals of the situation. So you have gap fill and you have the pivot lows right here from last Thursday and Friday. The gap fill is a major level here. If we hold above it today, meaning if we don't break below it, then that puts a potential positive spin on tomorrow, which then in tune could lead us to a flat to up day tomorrow and a good bounce next week. If by chance we take out gap fill and we take out these pivot lows here from last Thursday and Friday, meaning that at Friday's close, tomorrow's close, if we take out and we go below that level, and I'll give you the level right here, it's approximately 243.70. If we were to close Friday tomorrow on the SPY below 243.70, I would be very worried about the market Monday. In fact, we could have a very ugly situation, a big gap down, maybe a red bloody Monday type situation on our hands. So be aware of that. This is very critical. And again, let me explain the technicals behind it. Not only is it a gap fill and double bottom here, so this was gap fill right here, and here's your double bottom. So if we test that, it would be considered double bottom. You have to look at the bigger picture. Here was a high pivot on the market. All right, we actually put in a topping tail, which is why I made a call that the top of the market was in there. All right, when I saw that, it was in, and then we got confirmation on Thursday with a big sell-off. That was last Thursday. But again, here's a high pivot. Look at the high over here. Is that lower or higher? It's a lower high. So high, lower high. Low, right here. Right now, we have a higher low, which is more of a neutral signal because you got the lower high, but then the higher low. If, again, as I said, we take out this low, let's say today or tomorrow, then you have a lower low in the market. And that's where you start to get the building negativity there to the downside that could erupt in more pretty harsh selling to the markets. In addition, one thing I want to make a point of, the volume today is pretty big. This is one of our biggest days in months in volume. That tells me that institutions are participating in the selling today. And again, if institutions are selling, they're selling for a reason here. I mean, if they thought the markets had no risk to them and we're going to go up and up and up, they'd probably be net, on the sidelines or buyers here. They're not doing that. They're clearly selling. So listen, it's not heavy volume by any chance, by any stage, but nonetheless, it is obviously heavier. To give you an example, yesterday the entire day we only did about 50 million. Already today at 75 million. So these little things you want to pay attention to. And again, for me as a technician on the charts, I'm just simply watching this area right here, this gap fill, and then the lows right here. In fact, I'm going to put a line in right there so we can kind of monitor it over the next, hour of the day and into tomorrow. All right. Today, again, keep in mind, Cisco Systems had earnings yesterday after the bell. That stock's actually taking a nice beating today, down 4.5%. Applied Materials reports after the bell today. The stock's already down about 2.25%, so it's cushioning any sort of weakness. Be interesting to see what that does. That could be a semiconductor catalyst or negative because it is in the semiconductor business there. So we'll see about that. Volatility is reemerging today. The VIX is up big on the day. The VXX is up $1.55, which is a great move as well. So we are seeing volatility come in. Volatility hasn't been around for a long time, but it's apparently starting to reemerge. It's not even close to high levels, though. I want to make that clear. The VIX itself, I think, is like around 13 to 14, and that's still historically relatively normal to low. All right, once you get on the VIX north of like 18, 19, 20, that's where you start to get into the higher ranges on the VIX. The VIX actually right now is around 14 and a half, but still you got to get up, 18, 19, 20 to really start to get any real fear in this market. In all fairness, I bet if you ask 9 out of 10 average investors, they're going to all tell you that, oh, it's a buy the dip, and that's their mentality. But nonetheless, it's a beautiful move here on the VXX. Definitely a beautiful move. Okay? Other than that, I don't think I have too much else for you. So again, on the spiders, very simply put, just watch the gap fill, which we're coming down towards again here, towards the this almost to the 3 o'clock time frame, and then obviously if we get through that, even today or tomorrow, watch this double bottom right here. Come join us at InTheMoneyStocks.com. The profits are swelling as we positioned ourselves short going into this. Come join us, make money with us. Talk to you later. Take care.